Morning, ladies and gentlemen, and it gives me great pleasure to present the Neometals story to you. We are listed on the Australian Stock Exchange, so the usual speed reading test. So I start off with, look, Neometals is different. We are project developers, we're not explorers or anything like that. We actually sort of run the business a bit more like an asset manager. So we start with the commodity focus. You know, we're going to have to be in the commodity for a long period of time through a couple of cycles generally to get them developed. Out of that, we identify the best deposits that we can get in terms of having grade and scale. We will often acquire these counter-cyclically. We're very patient investors. My family's been in the mining industry for more than 100 years. So what we do is we add value with the drill bit. I first started mining as a driller. So we make the resources bigger, we do all the test work, we do the engineering studies, we get the approvals. So we build up the value pie, and then what we do is work out the best people that we can get to share it and pay the most for it. So we generally bring in multi-billion-dollar companies to take the off-take guys that are growing very fast so we can expand the deposits. We like to have strong operating partners. We've been able to execute that for Mount Marion and build the world's largest lithium concentrator with two multi-billion-dollar companies, a company called Mineral Resources, who's ASX 100, who put the plant there on a build, own, operate basis and funded it through to commissioning, and Ganfeng Lithium, who was China's second biggest lithium producer when we started, and now they're China's biggest lithium producer. That's enabled us to front-end a lot of cash. The board and management are the largest shareholders in the business. We do like to share the cash, and we paid 3 annual dividends and returned $34 million back to the shareholders. We've got a fantastic balance sheet. We closed an equity sale on the mine on Monday, so we banked 104 million Aussie dollars yesterday. So we've got a great balance sheet to attack the rest of our projects. I've got paper copies of this, so you can come and get one from booth, I don't know, C12, I think we are. So we've got 3 main projects now. We've got a lithium-ion battery recycling project up in Canada at SGS Lakefield, pilot plant running there now. We've got the world's second highest grade hard rock titanium vanadium deposit at Barrambie, and we've got a lithium refinery project. So who are Neometals? Like I said, we run it a bit like an asset manager. The board is more or less the investment committee, and the G-suite and C-suite come up with the ideas on how to spend it. What I've done there is I've actually put our share price, which has been a little up and down against the Chinese lithium prices, and there's a very, very high correlation. So unfortunately, Chinese lithium prices halved last year, so the hard rock suppliers that supply into China halved, notwithstanding that our product prices increased during most of last year but are now decreasing. So let's get into the lithium side of the business. So we've sold Mount Marion. We've harvested about $200 million off a $3 million investment there. We've retained a life of mine annual offtake for about 80% of the feed needed for our proposed lithium hydroxide refinery. One of the reasons why we did get out of the business is that prices, you know, they were abnormal. You can see there, they're spiking high. They're starting to normalise, and I think the Chinese copped the incentive prices to get the Australians to double and triple our capacity over the last number of years. We've got a bottleneck approaching of spodumene, which will mean a bottleneck of chemicals in China, and that'll take a couple of years to iron its way out. The lithium refinery, so we finished a definitive feasibility study and moved straight into the FEED study. We've recently finished that. We've basically told the market yesterday that yes, we've now got our money, but we're not going to spend it on the lithium refinery. What we want to do, we'll continue to advance the detailed engineering and the approvals processes to make sure that when the time's right, we can execute the project. But we're essentially putting that on hold for a number of years. We still retain a 4-year option on the land. And so here's the demand-supply balance from SFA Oxford. You know, depending on whether you look at the forecast, the probable or possible, you know, there is a severe deficit coming into the market once they iron the Australian concentrates out into chemicals. You know, we literally cannot see whether it's brine or hard rock where we're going to start to fill the gap. So I would suggest that, you know, from mid-next decade onwards, it's going to be very, very good times and revenge of the lithium miners. So we've got a strong conviction in the long-term battery thematic. I think you can't ignore that there's 72 mega factories that are going to be building these batteries. What we're even more convinced about is that these lithium batteries wear out and are coming back quicker than you think. So what we did in 2016 in preparing our lithium business for lower prices is we looked at recycling as a way to enter into leasing lithium if it was ever required. So essentially the concept behind it is for every lithium unit that we can recover out of an NMC 811 battery, we can get a tonne of nickel metal and 150 kilos of cobalt. So it's almost like compound interest for your lithium production. So we've gone ahead and bought a full commercial scale 50-tonne front end. That's it, set up at SGS in Lakefield. We've finished the shredding phase. We're now moving into the hydromet phase. Initially, we looked at lithium cobaltate only, but what we've found out in talking with the industry is that there is a real need for recycling to be provided for the NMC and NCA cathode chemistries, and in volumes that, or at a speed that we hadn't contemplated. So we spent the last year coming up with 2 flow sheets, and now we're piloting our preferred one. So essentially, if you're in California and soon if you're in the EU, if you produce a lithium product, you have to take it back, you have to recycle or fund the recycling. So they're pushing that back on, and you're not allowed to ship waste across borders. You're not allowed to put the used batteries in the hold of a commercial plane. New batteries you can ship around, but they don't like really shipping around the old batteries. So we do have to recycle. So essentially what we do is we shred it, then we separate the steel casings, the plastics, the metal foil. Then that leaves a black powder that we put into an acid solution. The graphite anode won't digest. We filter that off, and then we SX out the base metals, and lithium comes out last. Well, I could go back and just quickly show you what the front end of the plant looks like. No, I can't. Okay. We've got a pretty flexible business model. We can do it as a service. We can pay for batteries. We can do a JV, or we can license it. In terms of the timeline, we'll finish the pilot in the September quarter. We'll also start the front-end engineering and design in the September quarter and get to an FID by the end of the year. So whilst we might get priced like a lithium miner, we're no longer a lithium miner as of yesterday. We retain the offtake to become a lithium hydroxide producer at a time that suits us going into the future, and our clear focus is on the lithium battery recycling project. Our largest asset is the vanadium titanium project. Why we like vanadium, it's got a very, very strong China story. Like lithium, they produce and consume half the world's vanadium. Primary production's been going down for the last 6 years. The Chinese have now instituted new strength requirements in the vanadium rebar, or vanadium and steel rebar, and what's happened is the price has quadrupled last year. They've now backed off, so they're only twice what they were last year, which is good times for us. You've also, the amount going into titanium metal in aerospace is growing probably at a couple of %. What is really interesting is the vanadium redox battery. It's growing at between 15 and 25%. It is a Chinese government policy to proliferate these batteries, to decentralise power, and that will support their solar and wind industries. So we get to Barrambie. It is the world's second highest hard rock titanium vanadium deposit. We've spent $30 million on that project over 15 years. We're now coming into the second cycle in its history while we've owned it. And so what we're doing is we're updating the definitive feasibility study and a JORC 2012 reserve that will be out next month. It is the world's most advanced undeveloped greenfields project. We've previously received ministerial approval to develop it. I won't go through the fly-through. So it's big. It's as big as any deposit in South Africa. In terms of grade, it's second only to Largo in Brazil. Unbelievable exploration upside. We've got about 280 million tonnes in the top 90 metres. We've drilled it to 350 metres. The government seismic shows it goes down 4 kilometres. This is the sort of operation that we looked at in 2009. It'll produce 6 or 7% of the world's vanadium pentoxide, mine life of about 12 years. The operating costs are pretty competitive, large capital costs, but if you're going to build it outside of China, and China has banned the construction of any new vanadium refineries, and you have to build it in South Africa, Brazil or Russia, I think I'd be copying Australia as the prime location. You know, I suspect now we'll sit in the middle of the cost curve, and you know, where the current pricing is settling, that gives us a lot of headroom to finance this. So as we concentrate on the central bands for the vanadium, about 30% of the value of the deposit. I'll slip through. You can come and get a PowerPoint, a hard copy later. In short, we like to make money and we like to give it back to the shareholders. So thank you.